It's the midweek edition of the program. Thank you for joining us and welcome to the program. I'm Chimeze Obi Iwago. We'll start off from the global oil market space where prices dropped this morning after U.S. gasoline stocks fell more than expected last week, which could heighten pressure on the Biden administration to release oil from emergency reserves to cap soaring gasoline prices. U.S. West Texas Intermediate crude futures fell 76 cents to $80 a barrel, extending a 12-cent loss from Tuesday. Brent crude futures fell 72 cents to $82.71, erasing a 38-cent gain from Tuesday. U.S. President Joe Biden has been considering releasing oil from the Strategic Petroleum Reserve to cool gasoline prices, which hit a record high at California pumps this week. Lawmakers, however, have mixed views on whether it is needed. Analysts say SPR oil would only offer temporary relief, and what is needed is increased supply from U.S. shale producers or the Organization of the Petroleum Exporting Countries. Data from the African Petroleum Institute Industry Group showed gasoline stocks fell by 2.8 million barrels for the week ended November 12. The drawdown was much bigger than the 600,000 barrel decrease that analysts had expected. And back here, Vice President Yemi Osinbajo is promising the full implementation of the mining sector roadmap to increase private sector investment to drive growth in the sector. Professor Osinbajo explains that although revenue from the sector rose to about 3.8 billion naira in 2021, there is still room for improvement. Professor Osinbajo was speaking at a virtual meeting to mark the Nigerian Mining Week in Abuja. Let's take a listen.
The 2021 Nigerian Mining Conference is holding virtually, a meeting move that has gained traction since the outbreak of COVID-19.
I would like to express
the event is bringing together government officials, mining operators, and technology service providers to bear their mind on how to enhance the sector's contribution to socio-economic development. Statistics from the Ministry of Mines and Steel Development shows the revenue from the sector grew from over 2.3 billion naira in 2020 to over 3.8 billion naira as of October 2021.
it is such a great pleasure to
While this is seen as commendable, Vice President Professor Yemi Osinbajo, who delivers the keynote address, believes that the full implementation of the roadmap for the sector remains key to opening up the sector for private investment.
Currently, there's an ongoing review of the Nigerian Minerals and Mining Act 2007, aimed at bringing legislation into conformity with global best practices, limiting the role of government to that of regulation and creating the space for the private sector to maintain a more expansive presence.
Nigeria is reported to have 44 different solid minerals in commercial quantities across 500 sites in all the 36 states of the country. This large mineral deposit has seen government over the years coming up with policies to ensure that these resources are beneficial to its people.
We have indeed created a very business-friendly environment in the mining sector through reforms that grew out of the roadmap for the growth and development of Nigerian mining industry. The roadmap, which was formulated in 2016, gave us clear policy direction on how to develop the sector, which we have adhered to religiously.
There are also plans for the future in terms of processing and transportation.
We have commenced one pilot project per geopolitical zone in order to enhance local content along the mineral value chain. This is in line with our mandate to fast-track mineral processing in the country using a cluster approach.
One of the visions of the federal government is to ensure that by 2030, Nigeria is well recognized as a mining destination globally. It hopes to achieve this through its tax incentive, investment in infrastructure, as well as import duty waiver for equipment.
And in other development, there has been a lot of talk around responsible taxation and corporate citizens contributing their fair share to society through the taxes they pay to government. Now, taxpayers need to be able to understand their rights and duties and balance their legitimate desire to manage their affairs efficiently with respecting the law and the communities in which they operate. Also, environmental, social, and governance-centric investors focused on incorporating their values and concerns into their selection processes also expect companies to conduct their tax affairs in a manner that is responsible and transparent. It is therefore imperative that companies not only contribute their part, but take proactive steps to tell their story in terms of their tax contribution and its impact on the society in which they operate. There is also the need to establish the role tax administrators have to play in the implementation and sustainability of a responsible tax and transparent reporting system. This has also become imperative as the federal government plans to broaden its tax base. Joining us now to look at this is Martins Arogi, Partner, Tax Regulatory and People Services, KPMG, Nigeria. Good morning, Martins. Thank you very much for joining us.
Good morning, and thank you very much for having me too.
All right, let's start by understanding what responsible taxation is and why it should be on the table for organizations in Nigeria this time.
Thank you very much. When I listened to your introduction, I was a bit weary because I didn't know what else I was going to add because you had covered the topic very, very, very extensively. What is responsible taxation at the end of the day is primarily ensuring that the companies that operate in a particular environment take steps to pay the right taxes and also then properly report what they've paid. And a number of people typically focus on how much is paid, but there is a process that undertakes, starting from your governance rules and processes. How do you determine how much taxes you pay? How do you review the tax impact of the various transactions that you engage in? And then it then extends to what are the decisions you take on a day-to-day basis that impacts the taxes that you pay to the government. And then finally, how do you then report this? There's consistently been a lot of talk around how the Nigeria's tax to GDP ratio is extremely low compared to other countries in sub-Saharan Africa. And the question has always been, do multinationals don't pay their fair share, or are we focused on a very restricted number of companies to the detriment of the large number of other entities in our environment? And companies need to then take the initiative and begin to tell their story and say, this is how we engage the communities in which we operate through the amount of taxes that we pay, which then contributes to government resources and then development of those communities. So responsible taxation starts from taking the right decisions and then properly reporting how you contribute through taxes to the communities in which you operate in.
Now, is there a general framework for responsible taxation in Nigeria?
Unfortunately, we don't have one today because it has to be driven by legislation, but it doesn't exist. But even in the absence of legislation, we are saying that companies are responsible corporate citizens. So they don't need to be told what to do. They don't need to be forced to do these things. It's in their best interest to let the people that they provide services to, that they sell goods to, understand how much they spend on those companies' goods and services translates to the infrastructure that they see in their communities on a day-to-day basis. So it's for those companies to be able to tell that story and be able to drive that message so that people see that when I buy your goods, when I take advantage of your service, it's not just money that ends up in the pocket of shareholders. It also translates to impact in our individual communities through the amount of taxes that these companies then subsequently pay back to government. So yes, there is no framework, but we think that it's in the best interest of everybody, whether it is forced or not, to be able to tell this story.
Okay, so how does this key into the larger environmental, social, and governance, conversation, which is vital right now?
Okay, when you look at ESG as a spectrum, it covers both environmental, society, and governance. A lot of time, the focus is primarily around the environmental parts, which is climate change. You have countries that have tax laws that speak to or try to encourage the right behavior from a climate change perspective, carbon taxes, carbon credits. We don't have that in Nigeria. But there's also the impact on society because companies have a responsibility to the society and to the communities in which they operate. So that's one part that is covered under the concept of responsible taxation. And there is also the governance aspect. It is the responsibility of companies to ensure that they have a right framework and structure that guarantees that whatever is due to government is paid at the right and appropriate time. So government is not shortchanged. Because again, what's the primary source of government revenue? What's the primary source for the roads we see, the lights we have on, pipe-borne water in our communities? It's government taxes. So how have you put in place a structure in terms of governance that helps you ensure that you're able to do the right thing from a tax perspective that then has an overall impact on the communities in which you operate? So it ties into the ESG conversation, both from a society and from a governance perspective. And when you extend it to carbon taxes and carbon credits that we don't currently have in Nigeria, it covers the whole spectrum.
Now, is this being explored in other African countries, or Nigeria once again is leading the way in forward thinking?
There are a few countries right now in Africa, South Africa, for example, where the concept of responsible taxation and responsible tax reporting is already beginning to take hold. There are a whole lot more countries in the Western world where it is now compulsory in terms of disclosure requirements that you have to make. If you take the average financial statements in Nigeria today, and you can have access to at least all of that for those companies that are listed. What you will find is that the tax number or the tax paid is a simple one line, which covers only one type of tax, companies' income tax. It doesn't cover value-added tax, the PAYE that companies pay as a result of employees that they engage, that then impacts the community. It doesn't cover the various levies, social welfare schemes, and all of that. Several payments that companies make. You don't see them as separate lines in the financial statements. So users of this information don't have access to that level of detail. And it's very, very important that they have access to that level of detail. So yes, Nigeria is supposed to set the tone for Africa by showing the way that this can be done and how this can drive responsible behaviors in a whole number of companies, and also then currently have a significant impact on communities.
Now, some organizations may see this as unnecessary exposure. What do you foresee are the benefits for organizations in Nigeria?
It's a bit surprising when I hear you talk around, oh, I don't want to put out all my information out there because it may be unnecessary exposure. But the truth is, currently today in the tax space, there is an element of distrust that exists between taxpayers and tax administrators. Being more transparent, I don't think would increase the level of distrust. I think what it would do is help bridge that gap. Like I always say, whenever we talk about 6% being the ratio of tax contribution to GDP today, it's very likely that the focus has been on a small group. But we then make it compulsory for everybody to put out their tax information, you'll be very surprised and see that the guys who think that they are not, or who people think are not doing their fair share, are doing way more than their fair share. And what would that do? It would help you bridge that gap. It would help you build trust between taxpayers and tax administrators, because taxpayers have become a bit more transparent in the level of detail about their tax affairs that they are then providing to tax administrators. So I don't think that it would be unnecessary exposure. Rather, I think it will be something that would help build and engender trust between administrators, taxpayers, and the stakeholders in the communities in which they operate.
Now, what is the role of the government and, of course, tax administrators in nurturing, the growth of tax transparency?
Most importantly, legislation. Putting in place proper legislation that then makes it, in a sense, mandatory for companies to provide certain level of disclosures in their annual financial statements. Now, if you go to somewhere like the UK, they have what's called the Senior Accounting Officer Rule that was introduced over 10 years ago. So we will be coming very late into the market, irrespective of this. And what it says is that there should be a level of tax disclosures that has to be signed up by the most senior accounting officer in every company that details both your tax governance rules and then the amount you pay, not only the one-liner you would see in the average financial statement, but across the various bouquet of taxes, analyzing how it compares to your profitability, how it compares to your spend on various other items that you do on a day-to-day basis in the company. How does it compare with your overall industry average? How does it compare with other industries? So one thing that government can do is put in place that kind of legislation in Nigeria, and that's the most important thing. And once we have that legislation, we have that level of detail, it also helps government in a sense, because we've always complained about the same set of companies being audited over and over and over again, without us having the resources to cover the entire field. Now, if you have that level of disclosure, that level of information, we can then commit the limited resources we have to do audits on those which we have concerns around the level of information that they provided. While those for whom we have adequate information and we are satisfied with how that information compares with industry average and with other aspects of the company's financial profile, we let them go. So it's more around a risk-based approach to conducting audits that saves government resources. So it's something that works for both, not only government, taxpayers, and again, like I said, the end of all of this is me and you, and also having access to information that helps us understand how the activities of these companies translate to impact for me and you.
Yeah. Now, I understand that KPMG is having some kind of enlightening webinar on this. When is that, and what can we expect to gain from this session?
Okay, the webinar is next week, Thursday. It's on the 25th of November at 10 a.m. And we will be having representative of the tax administrators there. We'll also be having a very renowned ESG advocates from civil society and from the academia, just to share their own perspective as to how all of these types of companies taking the initiative, government supporting them, and how all of this adds up to impact in society.
Okay. Well, before I let you go there, of course, last week the federal government had announced a new development plan, a national development plan, where it indicated its intention to broaden the tax base. From KPMG, what's the take of your organization in this whole thing of broadening the tax base?
Okay. Now, this ties exactly, responsible taxation would even help in broadening the tax base, because it helps immediately identify those who are not paying their fair share. Transparency reporting helps identify those who are not paying their fair share. You can't broaden the tax base without having information. And this is a veritable source of information that helps you broaden the tax base. It's a conversation we've been having for years, how we place significant burden on a very small percentage of corporate citizens, and how it's very necessary to broaden the tax base if government needs to increase its stake from tax in the country. So yeah, this ties into that conversation, making sure that companies report what they do, and then gives us a foundation to determine those that we need to then go after and help broaden the tax base.
All right. Thank you very much, Martins Arogie, for sharing your thoughts with us today on responsible taxation. I think I learned something there. I wish you all the best. Enjoy the rest of the day.
You too. Thank you very much for having me on.
You're welcome. FX Commodities Market Update is next after the break. To stay with us. The value of trade on the FX commodities market in the week that ended November 15 declined by 11%. However, both the number of contracts and the number of deals closed in the green, up 251% and 260% apiece. For more, we have Michael Martins there, portfolio manager at FX. Hey, Michael, good morning. Great to see you.
Hi, Chimeze. Good morning. It is always a pleasure to be here.
As usual, let's start off with the week's activities. Bring us up to speed with what happened.
Thank you very much, Chimeze. So if you look at the table in front of you, you will notice that the total value of transactions traded on the exchange fell by 11% from 9.58 billion to close the trading week at 8.51 billion. Naira. And if you also look at the total number of contracts, it however went up by 251% from 1.2 million contracts to close to trading week at over 4.3 million contracts. The total number of deals also went up in tandem by 260% from 61 deals to close to trading week at 220 deals. The ACI, which is the FX Commodities Index, remained unchanged at 427.34 points. And the AEI, which is the FX Export Index, also remained unchanged at 168.08 points. With regards to the volume of contracts traded on the exchange, there was a general increase in the number of contracts traded on the exchange this week, with the biggest changes coming with maize, which traded up from 229,000 contracts last week to trading over 4 million contracts this week. We also saw changes with cocoa, which traded up from 3,324 contracts last week to trading over 14,000 this week. And also with soybean, which traded no contract last week, to trading over 33,000 contracts this week. The only fall that we saw with regards to the volume of contracts traded on the exchange was with paddy rice, which traded downward from 1 million contracts last week to trading just over 141,000 contracts this week. With regards to price changes in the exchange, there was only one commodity that was green, and that was paddy rice, which went up by 8.18%, gaining 18 naira in the contract value to close the trading week at 231.50 naira. With regards to the commodities that fell in price in the week, we saw the biggest change with cocoa, which fell by 4.03%, losing 50 naira in the contract value to close the trading week at 1,199 naira 63 kobo per contract. We also saw a change with maize, which fell by 1.02%, losing 17 naira in the contract value to close the trading week at 169.36 naira per contract. And then lastly, but certainly not least, we have a slight change with soybean, which fell by 0.35%, losing just 13 naira in the contract value to close the trading week at 363 naira per contract. So those are largely the biggest changes with regards to price, volume, and also a summary of what happened in the commodities exchange in the week under consideration. And if you want to know more, as we always say on the show, you can go to our website, which is www.afxnigeria.com. Or if you really want to get started trading spot contracts and fixed income contracts on the exchange, you can always download our app, which is COMEX, which is available on iOS and also on Android.
All right, Michael. Well, cocoa spot contracts went live a couple of weeks ago, and grain spot contracts are due within the coming weeks. Can you make a case for why people should invest in spot contracts?
Thank you very much, Chimeze, for that question. And I think that's largely an even important question in light of the fact that the spot contracts will be launching in the coming weeks. So the simplest way to explain it is this. Without spot contracts, right, if you wanted to engage in the commodities market, if you wanted to invest in the commodities market, what you would have to do is essentially go to one of the biggest markets or any of the markets that are, where grains are currently traded, buy those commodities, look for a place to store them, and then hope that, the price of that commodity appreciates over time, usually over a 9-month period, which is like the traditional or the conventional commodity trading cycle. What spot contracts allow you to do is that they allow you to also take that type of position in the commodities market without you actually holding those physical commodities in your hand, right? Before spot contract, you would have had to buy those physical commodities, look for a place to store them, and then also look for somebody to sell them to, right? In hopes that, and also you have to pray and hope that the price of that commodity would also appreciate. In buying spot contract, it's almost the equivalent of buying the stock of a company, whereby you're buying the right of ownership to a particular volume of commodity, and instead of you also having to look for a place to store, you don't necessarily have to do that when you have a spot contract. And instead of you also having to look for somebody to sell that, sell that commodity to, the physical commodity to, in this case, if you buy a spot contract, there is enough liquidity on the exchange, that would allow you exit and enter your position as and when you want to do that. So those, I think, are largely the biggest advantages to buying spot contracts, on the exchange, as opposed to people having to go to the market themselves. Because I don't imagine that whether or not you're a retail investor or whether or not you're even an institutional investor, that you actually want to leave your desk and then go to the market and start buying commodities yourself. It is much easier to buy spot contracts, which essentially make it, much easier for you to invest in the commodities market.
I see. Now, ETC is also another product that was launched last year. Can you give us a sense of how well it did this year and what the plans are for next year?
So thank you very much, Chimeze, for that question. I think it's a beautiful one because the pilot of the ETC was launched last year. It was the first time we're launching the product. And we wanted to essentially test how well that type of product was essentially going to do. So just to explain what an ETC is, so as opposed to you individually buying, buying individual spot contracts in the market, whether that's a maize spot contract or a soybean, spot contract, or even a cocoa spot contract, you essentially get to buy a basket of commodities in what we call an ETC, which is an exchange traded, commodity. It's similar to what you have in ETFs, which essentially baskets, different spot contracts together, and then it allows you to buy that entire basket at once. When we launched the product last year, the product was launched at, I think, if I remember correctly, at around 10,000 naira per contract. It then closed, I think, at the end of a 270-day period, which is about 9 months, at, I think, around 16,800 thereabouts, meaning that investors over a 9-month period made approximately 68%. Now, that's not where the juice is. When you understand that when you analyze that amount, it more or less amounts to more than 90% over the course of a 12-month period. I don't think any other investment asset class did as well as that, over the last 12-month period, right? And I think that's sort of symptomatic of what we are expecting in the new commodities market trading season. The ETC will be launching in the next couple of weeks, and I do hope that this time, that a lot of people are willing to participate in that market, because there is potential to make, a significant amount of money from the commodities market.
Now, just before I let you go, Michael, the October inflation numbers was just released recently. How did you guys at Apex read those data, and how's your market responding to that?
Thank you very much, Chimeze, for that question. We've at different points in time spoken about the correlation that exists between the commodities market, and the general inflation. What we can't say definitively now is that due to the fact that a lot of the price dynamics in the market are still unsettled, right? So whether you're talking about grains or whether or not you're talking about even with export commodities, prices tend to essentially as volatile as they've ever been, right? So take, for example, a commodity like soybean. So soybean essentially went down from about 380 to 340 in the last 2 weeks, only to come back to around 390 yesterday. So we are seeing a significant price movement across board, for some of the commodities that are traded on the exchange. The implications of that on the inflation rate itself, we are not sure yet. And I must also say here that we haven't really had as much of the volume of commodities coming into the market yet, right? Well, you tend to see that towards the latter end of the month of November, and also the subsequent months of December, and then also January and February. That's usually when you can start significantly correlating between what is going on in the commodities market and then what you also see evidenced in inflation rates. So with regards to what the correlation currently is, I can't really say definitively to that, largely due to the fact that a lot of the price changes that are happening with commodities are extremely volatile, and it's also the case that a lot of the commodities in terms of volume haven't necessarily come into the market yet.
Great. Thank you, Michael. All right.
Thank you, Chimezia.
Yeah, still on AFEX. So, according to the United Nations Food and Agriculture Organization, at least 9.2 million people in Nigeria suffered a crisis or worsened levels of food insecurity this year as a result of armed conflicts, the consequences of COVID-19 and climate change. Now, this figure is expected to increase due to the effects of climate change on global food systems and crop production. Smallholder farmers are increasingly being impacted by the cumulative impact of droughts, floods, heat waves, and wildfires, as well as pests and diseases. Without adaptation, climate change may lower agricultural yields globally by about 5.30% by 2050. And if diminishing supplies result in price rises, at least 50 million additional people may face food insecurity, while a viable food balance sheet has been proposed as a vital component of food security. And that's what David Ibidapo, Senior Research Analyst at AFEX, will be speaking to us about. Thank you very much, David, for joining us on the program.
Yeah, thank you, Chimezi, for having me.
So how important is a food balance sheet in tracking food security in the country?
Okay, I think for us to establish the importance of food balance sheet in achieving food security, I think one of the first things we have to also establish is what is even a food balance sheet, right? So it's actually, it just shows us a comprehensive picture of the pattern of a nation's food supply, right? So when we look at data points around food production, right? Our import levels, what is available for households to consume, and other very important data points around food, around the agricultural space, and that's what it shows us a very comprehensive picture, right? And also looking at utilization of our food, right? And also, it's very important for us to understand that in churning out policies, right, any policy that is churned out that is not data backed is actually a plan to fail, right? And so having these important data sets, which we actually help national governments to be able to analyze and also bring out policies that are actually important enough to drive food security in the country. So I would say that's one of the major importance of food balance sheet.
Sure. So one of the functions of a food balance sheet is that it establishes the food situation in the country, yeah. Just as you said, through estimations and projections, and of course promotes agricultural development through policy and import-export trade analysis. So what are the immediate steps in terms of policies Nigeria can actually get into to have a functioning food balance sheet to enhance its food security?
Thank you for that. So I would say, first of all, there must be a political will to do that, right? And also, secondly, we must actually set up more or less like I would call a sustainable food balance sheet committee that will be tasked with the responsibility of ensuring that this data are actually gathered, right? This data are analyzed, and based on that, recommendations are actually made to the government, or even private institutions can also make these recommendations to ensure that good policies are actually churned out based on the data that has been derived from the survey and everything. Then also, it's important for us that to understand that one way we could also achieve food security is by ensuring that the federal government is very, very intentional in investing, right, in that space, right, and also like funding. So I would say funding research activities around gathering data, and also intentional investment in technology solutions that would actually help, that actually ease the activities around gathering data on our food balance sheet.
So how can private organizations like AFEX, can help achieve an accurate food balance sheet to help drive food security?
First, we've started a lot of activities around that. I found one which everyone can attest to is our recent crop production survey, right, which we started last year, and also it's something that we believe is a very important part in a nation's food balance sheet. That's where we're looking at production levels, and also we're looking at trying to forecast what production levels are, which we believe are actually very, very important. So that's one activity that we are engaging in at FX to ensure that we also contribute to achieving food security in the country. And also, when we look at some of the technologies that we are currently leveraging on, right, around technologies like our workbench and and also leveraging on AI to identify some patterns, climate patterns, farmers patterns that would also help us to know where the gaps are, right, and also where we can actually finance farmers, and also how we can play in the value chain in the agricultural space, so as to ensure that we also play our part in driving food security in the country.
Now, before I let you go, looking at African context and African food system, how can the food balance sheet ensure more resilient, and sustainability?
Food system. One of the things that we've been able to establish is the fact that we are at a critical period, right, where food systems have been threatened by climate-induced shocks, right? That has also been threatened by some level of crisis, and also even the recent COVID-19 pandemic, right? We believe that one way that food balance sheet is going to be able to drive food security in Africa will be through helping to boost regional trade, right? So when economies of the world when economies in Africa, national governments in Africa are able to establish some patterns through data collection, right, across key data points in the food balance sheet, right, they will be able to take adequate position in terms of policy, right, to be able to drive trade, be able to drive spurring production levels across the countries. And we believe that in the light of the CFTA, right, one of the first steps for national governments in Africa to unlock the gains that AfCFTA actually brings will be to have a comprehensive and a sustainable food balance sheet.
David, thank you very much. We do appreciate your time. We take a moment. We'll be back. All right, let's look at the local markets there. We have Agnete back in the green for the equities, right?
Yes, good morning, Chimi. Back in the green, that's what it is for the equities markets. And of course, we will be taking our focus on two of the markets, two of the biggest financial markets in Nigeria. That's the fixed income markets as well as the equities market. But latest reports from the National Pension Commission shows that pension fund administrators are taking solace in the stock market, and that as at the 30th of September, that they invested about 874 billion naira worth of investments in the equities market, and that is taking away from the bonds market due to declining bonds yield. So now let's take a look at how that market panned out yesterday. It was a mixed trading yesterday because, of course, at some point there was some sell-off and then there was the demand. But at the same time, it ended on a bearish note. Number of deals carried out there was 9, valued at 2.32 billion naira. Of course, we will be looking at the Debt Management Office auction of 150 billion naira worth of debt instruments to be auctioned to investors today. Of course, they will be looking out for that, and we will be having our guests to talk about that, what to expect, especially as regards yesterday's transaction and today's transactions. So then also the Treasury bills market, it was bullish. Of course, there was lots of demand, especially for the 282 dates to month papers. So now, but let's bring in our guest, Caleb Alimi, who is a fixed income dealer at FSDH Merchant Bank, to tell us more about those markets, the fixed income market. Thank you for joining us, Caleb.
Thank you, Andy. It's a pleasure to be here.
Pleasure's mine. Now, of course, the market is looking out for the Debt Management Office auction of 150 billion naira bonds. And of course, there should be some reaction from the recent announcement of the recent inflation report released by the National Bureau of Statistics. So now, how are investors reacting to that, as well as what are they looking out for in today's transaction?
Thank you, Andy. So the inflation report at 15.99% year-on-year was interesting, but the market doesn't pay much attention to that. We largely pay attention to interest rate decisions by the CBN and other signs from that body language. So today, the DMO has 150 billion in offer across three maturities: 2026, 2037, and 2050. The market has been largely quiet on the bond side. We expect that most of the PFAs and asset managers and other pension fund managers will just go in for the auction. We expect it to close about the same levels where it closed at last month. The 2026 paper closed at 11.65. The 2037 closed at 12.95. The 2050 closed at 13.2. We expect all those levels to be, maintained, given the level of activity we've seen in the market, which hasn't been a lot. PFAs and other fund managers have found it easier to go to those primary auctions to get the size that they want, and then they just lock up shop from there. So we expect that to happen again for the bond auction. As for the demand on the NCD space, we expect that to continue. We've seen that the DM was consistently oversold the one-year paper at that auction. We expect that when there's an auction later in the month, that sentiment will also persist. And like you rightly mentioned, the rates there are deep. We continue to see demand for that. There seems to be not enough paper, given the liquidity that fund managers have at this time of the year. As we go further in the year, we expect activities to slightly drop, except for portfolio rebalancing activities and positioning for next year, as you were. There was also an OMO maturity on Tuesday of about 72.5 billion. We expect the CBN to actually offer less than half of that tomorrow at an auction, to also sort of control and mop up liquidity in the system.
Okay, so thank you for that update, Caleb. Hope to hear from you. Okay, so Jimmy. Jimmy.
All right, thanks, Anita. We'll continue to monitor the markets, both markets, actually. We'll take another break, and when we come back, we cross over to London. And so we have Juliana to bring us up to speed with the latest developments there in London. Well, Juliana, investors are monitoring a raft of inflation data, looking for clues as to how central bank will move in the coming months. UK inflation out today shows a surge to 4.2%. Perhaps interest rate hike will happen in December. Am I right?
I think so, if not next month, certainly in the coming months. As you said, CPI has risen to 4.2% from 3.1% in September. This is a massive jump. At 4.2%, inflation is now almost double the Bank of England threshold of 2%, and it's really weighing down on consumer spend and how much money households have at the end of next month. We discussed yesterday, Chimmy, that the Bank of England Governor Andrew Bailey was given a testimony in front of select MPs at the Treasury Select Committee in the House of Commons on Monday, and he did express concerns about the current rise of inflation. And of course, this isn't just here in the UK, it's everywhere. Last week, inflation rose to its highest level in 3 decades in the US. Later today, it's expected across the Eurozone that inflation will be at its highest level in 13 years. But it's still a shock. In the month of November, it's anticipated that inflation would rise to 4.5% and then peak at 5% next year. The only way to abate this is by raising interest rates. We've seen that the UK labour market is pretty swift. A lot of people are working, which means that the demand is still going to be there. Prices will continue to rise if the supply issues remain as they are. So, yeah, pretty much shocked the markets this morning. Reuters, they did a survey by some economists. They expected inflation in the UK to come in at 3.9% in October, but the fact that it's coming at 4.2% is certainly weighed down investor sentiment, which is why the FTSE is in the red at early trade.
And of course, we'll get an update on that at intraday. In another development, the government has announced plans to boost the UK's annual exports to £1 trillion by the end of the decade. Tell us more about this new plan.
Well, it's the plan is called Made in the UK, Sold to the World. And, of course, this is all really about the British government trying to seize post-Brexit opportunities and make Britain one of the leaders in exporting some of its goods. At the moment, I believe only 1 in 10 British firms export outside of the borders, and they want to increase that. According to the latest data, last year, Britain exported about £600 billion worth of goods. They want to improve, but of course there is going to be a massive stumbling block, which is Brexit. The biggest trading partner that Britain has by far are countries within that bloc, and since the Brexit vote, since the withdrawal agreement has come into fruition, it's become a lot more difficult. We know that trade, particularly between Germany and Britain, has been reduced. There's a lot more bureaucracy, a lot more friction since they came out of the single market. But of course, there's got to be a plan, and the plan is £1 trillion every single year within the decade. Ambitious, yes, but if Britain does continue to invest in life sciences and the electric vehicle market, then perhaps this vision could become a reality.
All right, thank you very much, Juliana. So we hope to get more update from you later in the day.
Thank you.
Okay, let's look at the crypto space. Ladi, what's happening there?
Well, Jimmy, talking about inflation rates ticking up in UK there. Well, the so-called inflation hedge, one of the hedges that analysts say is strong for, hedging against inflation, is down about $9,000 from the previous high, and there's still blood on the streets, and the crypto streets right now. We see the market cap there for the total crypto market is down 2%, down from the $3 trillion market hit the last time. It's now $2.59 trillion. We see 24-hour volume, $142.54 billion traded in the total crypto market, basically from the major sell-offs we see in the market there. Bitcoin dominance, 43.58%, is still hovering around that range. Price of Bitcoin, it's fallen below the 60K range. Now it's at 59,462 points. This is a major support right now. If this support breaks, we could be looking at $53,000. 24-hour volume, $42.23 billion traded in Bitcoin this morning. You see a rise in volume there compared to yesterday at this time. Price of Ethereum still above the 4,000 range, but some analysts are seeing it go below this point if Bitcoin continues to be volatile. At this point, it's down 3.77%. Volume traded $25.21 billion at 8 a.m. this morning. Let's look at the top Wall market cap there. We see it's all red there, but BNB there down 6.62%, below the 600 mark. It's now at $563. Cardano bit in below the $2 mark there. It's down 5%. Solana, $211, is down about 6%. And we see XRP. XRP seems to be inching below the $1 range at this point. Hopefully there's a bounce there somewhere. We see it's down 3.63% this morning. And you know the way the market goes, when Bitcoin goes down 5%, you see all these altcoins drop double figures, like to 20% to 30% at this point. So Bitcoin does dictate the pace for the market at this point. Top 5 gainers, we have Sandbox there, one of the metaverse ecosystems there. gaming platform. It's up 25%. It's doing well regardless of Bitcoin's volatility. And we see WaxP, another blockchain with about 0% fees there. It's at 80 cents, down 9.24%. And we see Mana, another metaverse token there, $3.32. It's had an amazing run ever since Facebook announced that they were rebranding to Meta. We saw metaverse tokens surging there. Mana was trading about below $1 at that point. Now it's about $3.32. It's up 7.31%. And we have Leo there, $3.13, up 6.94%. And we have Curve at $3.91. Look at the top losers there. We see ARMA there, down 13.82% at $18. And Zcash, one of the privacy tokens there, at $155, down 13%. And KuCoin shares has had an amazing run. Early October, it was trading around $11 per token. It's had a nice surge, getting close to $30 before Bitcoin got volatile, hitting the price down there. It's down 11%. And we see PancakeSwap. PancakeSwap was sitting at $18 for the longest time, biting down to $16, down 10%. And we see Litecoin there, $223, down 8.99%. Well, I think we have Gilbert. Hello, Gilbert. How's it going?
Yes, good morning.
Well, Gilbert, there's so much blood in the streets right now. I don't know how your portfolio is looking. What's going on?
Okay, despite there being a lot of blood in the streets, there are also will buying activities taking place. As at yesterday, the third biggest will added 207 Bitcoin to its portfolio. The key point most people will miss is that this dip is a currency-based event. The breakout to the 69K zone on the 1 month needed a higher time frame retest for a breakout confirmation. So the question which most people will have is if this retest is over. But the answer is a probability-based answer, since retail investors always overreact to market volatility. We may see a little breakdown below this 1 month retest level before a continuation because retail investors will always overreact to market events. But this may also be a trap for retail investors who may lose their position before the upside begins, and yet is also a re-entry position as well for retail investors. But I am still very bullish long on the market.
All right, Gilbert, still bullish regardless of the blood. Thank you so much, Gilbert. Enjoy the rest of your day.
And you too. Thank you.
All right, Chibi, there you have it. You know,
I remain bullish with Gilbert.
He remains bullish, right?
And I remain bullish.
And he says the whales are buying the dip. So,
absolutely.
Yeah.
Well, we'll continue to track the market. It's interesting to, get to see the ups and downs in these markets. Well, if you have the mind to take the risk, it's worth trying, I guess.
Financial advice.
Absolutely. Okay, well, that's a wrap on the program. And as usual, don't forget to join us by 1:30 this afternoon on Business Incorporated for more updates on developments in the world of business. I'm Chimeze Obi Iwawo.